I got some new glasses. What are we thinking? Clark Kent or Jeffrey Dahmer? Got some hot coffee for it's cold as balls weather out here. It's snowing right now here in the Midwest, home of the angry. And you know who else is angry? Boeing shareholders. The news here has been awful, more embarrassing than Claudine Gay's testimony before Congress. But then again, if they would have made a move out of her playbook, maybe they would have plagiarized some better schematics and not be in this mess. Overall, the sentiment here is going to take a lot of time to recover and be repaired. I think this stock is headed much lower. Right now, I'm looking for a bounce so I can come in short again. Congrats if you're one of the Discord members that shorted this all the way down. I did not, but that's okay. We made some money here, and that's all that matters, right? Now, let's talk about SPY because this is really important. It's just in my gut that the next 2 months are probably going to be rough for the market, especially when we're getting some pretty suspicious data starting to come in, like our M2 money supply. This is the first time the rate of change in M2 money supply has actually gone into negative territory in over 50 years. I think it's something like 70 I was reading. So this is the measurement of cash or easily convertible cash products, your CDs, your treasuries, your MMDAs, your mutual fund, retail mutual funds. So this going negative is definitely a sign that inflation should be coming down as demand starts to decrease as people have less money, but also that the economy is most likely headed into a recession. And there will be people who say, well, that's bullish because then the Fed will cut rates and the market will rally. But as I've said many times in the past, as is probably the most viewed long form video I have actually created on YouTube, the Fed cutting is usually a sell signal in the markets because it means something is seriously wrong. And as you can see on this chart right here, where we have the Fed rates down here and we have the S&P 500 above, there's a very strong correlation with cutting from the Fed and sell-offs in the market. As soon as the Fed starts to do their first cut, the market begins to sell. So the way I've been handling this is I've been looking for opportunities to get short on the market, and I actually got more short at the end of this week. I think Thursday and Friday I did more buying on my February puts. I did that because, as many of you know, I was eating it into the end of the year with being short my portfolio. At the end of the year, I got max short with like 70% short in my trading portfolio, which is highly unusual for me to really get that short. And so I took a lot of gains on the way down here and tried to de-risk that. So right now, I'm not taking a lot of pain, but in anticipation of the fact that I don't think we've got the true downside move, I am building back short right now. And this triple top right here in the short term, the weakness in the market, the fact we got selling into the close on Friday, this has me leaning short once again. And keep in mind here, if we do get a breakout, I'm going to have to cut that position, take the L, and look for re-entry. And I'm going to want to see ample confirmation right there. I don't want to get faked out on, a breakout of 480. We might even have a touch and go before we actually get the downside move. It's not out of the cards, especially in a market like this that doesn't really want to melt down when people are honestly feeling pretty safe. I mean, look at this VIX. It does not want to budge. People have been selling all the insurance that people have been buying to protect their portfolios, been printing money right now. However, I don't know if I can recall a time where there's been this much interest in calls. January and February, even on Friday, people were still loading up. Your call sizzle was almost 5. It was actually over 30 on Thursday as well. And if we take a look at the volume distribution, we can see that it peaks in mid-February and then drops off pretty substantially by March. So these are our short-term insurance that people are likely buying on their portfolios. And I haven't even been watching this, but I thought, you know what? I better go to wide chart and look at the historical call volume so I can make sure that my intuitions are correct here. And it does look to be the case. In fact, this is the most call volume we've seen on the VIX since before the 2020 crash. So if you're not in the Discord right now, I would probably get on top of that. And now let's talk about Bitcoin. We're getting the sell-off that we were expecting after the ETF news. We've crossed below a 50 RSI. We had this double bottom during this uptrend, but it was clearly an uptrend. And now we're crossing below, clearly in a downtrend. I think this is going lower. I'm looking for potentially 34 right now, but I would be a buyer below 40 for Bitcoin here. Although I think Ethereum looks a lot more appealing than Bitcoin at this point in time. Okay, we're actually seeing a lot of strength out of Ethereum. I'm expecting some rumors of ETFs if we've not already received some of those. And due to the lower liquidity on Ethereum in general, I think that this will give even more returns than Bitcoin did into its hype run up, which was, about 100%. And now let's talk about uranium. I am so pumped about the movement we're seeing in radium. I think this is a 10-year bull market. I've been tweeting about it a lot. I've made tons of videos about uranium, although not as frequently as everything else. It's a very slow moving sector, but I think it's going to be extremely profitable. We're seeing a triple top in URA right now, and with a lot of bullish indications, I think this thing is about to take off. We already have made 50% on some option returns as well. I have a very sizable position in both those options and in shares, although did take some profits at 50%. And the thing I love most about URA is the diversification within this portfolio. This isn't just uranium miners. This is also some utility companies, the engineering side. Basically, you're touching on every aspect of uranium within this portfolio. Now, for Discord members, you might recognize that, hey, the largest holding in here is also another company that I've been playing a lot, and I'm a holder in, but I like the double exposure to this company. And then I like URA as a more diversified holding as well. I like to play the big guys because they usually will give bigger returns. So if you're looking for outsized returns, I would definitely keep CCJ on your radar. And if you're wanting to do some stock picking in uranium, I would start by looking at what the holdings are in URA, because these are some good picks. Now, as for the news that's causing this run up in uranium, this is a shortage that's occurring in one of the largest uranium mines. Now, keep in mind, this shortage is actually expected to last for over the next 2 years. Now, this is big because uranium also has a very complex supply chain. Okay, so this over 2 years could turn into over 5 years, and then you have to then calculate the amount of demand increases that we're seeing as well. China's trying to build tons and tons of nuclear reactors. I expect the rest of the world to try and chase them in that endeavor, as this is the best technology. And I know across the internet you're going to see lots of doomsday people about how nuclear is still very dangerous. You're just going to have to put your hands over your ears and ignore the uneducated, because this is the technology of the future. This will lead to an amazing, bright future. Cheap energy helps everything. It has huge ripple effects. This is extremely exciting, and I just want to pound the table about a 10-year bull market for this sector. And now let's talk about the Apple lawsuits. In my yearly prediction, I said that this could potentially be the turnover for Apple unless it can create a lead in the AI space, and this is one of the reasonings for it. If these lawsuits go through, which I think will be a high likelihood, we're seeing lots of people be very dismissive of it, but the DOJ doesn't spend over 2 years, and in your back office digging unless they think they're onto something. And there's a lot of predatory practices that Apple used to generate at the amount of capital they do, the amount of profits they do, the way that they handle their app store as well. I mean, Discord members know what this is like. Since even as simple as like if you subscribe to my Discord through an Android device, you pay the actual fee, but if you actually subscribe on an Apple device, you pay like $5 extra for just no reason whatsoever. It's nothing I can even prevent, but that's just one example of the predatory practices that Apple uses and why their services generate so much revenue. So I'd keep an eye on this because this is starting to wrap up, and I think this year we're going to see that, probably the beginning of this year, really, we're going to see that news drop, and that will create probably a short opportunity on Apple. Now, keep in mind, this is still the market's golden boy, and so I'm not expecting massive crash or anything on Apple here, not unless we see, that big move we're looking for and the broader index, and then, maybe then additionally, if you get this news on Apple on top of that, maybe you do see some exaggerated selling here, but especially if you're long on Apple right now, keep that on your radar. I mean, so far this year, I don't want to toot my own horn, but I've been killing the market. This has been one of the best starts to the year I think I've ever had, and I'm excited about what the rest of 2024 has to bring. Then, of course, there's always tons of more information in the Discord. There's so many things to watch. I can't include them all in a video. We're going to be here forever, but I like the way my research is looking. I like the amount of opportunities I'm seeing. I have a different process for going through all my stocks and stuff. I didn't live stream much this week, but we'll be doing more of that in the future. And if you don't like to use Discord, at a minimum, I recommend you go follow me on Twitter. It kind of blows my mind how many people use Slack in their day-to-day jobs, and then I tell them like, oh, I operate Discord, and they don't want to use it. Like it's some sort of alien technology. Like, bro, Discord is the same exact thing as Slack. What are you even talking about? It's just way better. Boomers. What are you going to do? Anyways, hope you enjoyed this weekly report. I'll talk to you more in the Discord.